Good day, ladies and gentlemen. Today is August 12th, 2024, and today I'm going to be teaching you the difference between liquidity sweep and liquidity run. Okay, a lot of persons think liquidity sweep and liquidity run are the same, but the truth of the matter is they are actually different. So the concepts are similar, but they are different. So I'll be explaining that today so that you can have the knowledge and definitely improve your trading with it. Okay, so basically, what is liquidity? Liquidity is simply an area where you have a lot of orders. Okay, so price always want to go to this area, all right, and most times these orders are usually stop loss orders. Okay, so basically, let's say you have an uptrend like this. So when price is trending in a certain direction, it could be uptrend, it could be downtrend. Okay, at the highs you are going to have liquidity at those levels because some persons will be taking sell trades here, then their stop loss will be above that. So price will want to go and take out the liquidity. Okay, so the same thing in the downtrend, you're going to have lower lows and lower highs created like this. Now at these levels you're going to have liquidity there because some persons might take buy trade here, their SL will be below that level and price will want to come to seek the liquidity right there. Okay, so those ones can be called internal liquidity, while if the liquidity is at the extreme edge, if the liquidity is at the extreme edge, we call it external liquidity. For example, let's say you have something like this. So this extreme edge right here is going to be seen as external liquidity. Okay, while the liquidity within price movements is known as internal liquidity. It could be fair value gap, it could be other highs and lows that price is trying to break internally. Okay, so basically you have that as a background knowledge of liquidity. Now, what is liquidity sweep? Okay, I'll start with liquidity sweep, then I'll go to liquidity run. Now, liquidity sweep, for you to be able to differentiate it, it's all about the reaction of price after the liquidity level has been taken out. Okay, so the short explanation I give that help traders differentiate between liquidity sweep and liquidity run is that a liquidity sweep leads to a reversal movement. Okay, so when there's a liquidity sweep, there will be reversal. Okay, there will be reversal when there is a liquidity sweep, but when there's a liquidity run, there will be what? Continuation of price movements. Okay, so price will continue in its original direction when it's liquidity run. So I'll basically just give you two examples on the charts so that you can see how it actually plays out. Okay, so look at this. You have an eye right here. Above this eye, you definitely have liquidity above that eye. Okay, I did a video a few days ago where I talked about the different types of liquidities that we have. Okay, so I mentioned the fact that liquidity rests above highs and above lows, and also above equal highs and equal lows, stuff like that. So you already know there will be liquidity above this eye. So look at what happened. Price came back to that eye and swept the liquidity. You can see the wick with which the liquidity was swept. So you have the wick right there. So the liquidity above this eye has been purged. Okay, it has been taken out. So what happened after the liquidity was taken out? Price moved in the downwards direction. So now you are going to ask yourself, is this a liquidity sweep or a liquidity run based on the explanation? So the explanation will help you differentiate the two easily. This is a liquidity sweep because it led to reversal from that level. Price moved in the opposite direction after taking the liquidity. So this is a sweep. Okay, so look at this right here. Price started moving up like this and then gave us an eye right here. This eye will have, orders at the top. Okay, so definitely there is liquidity above that eye. Now, what did price do? Price got to the level where that eye is and continued moving. It did not react downward from this level. So this is what we call liquidity run, because when price got to the level, price did not react from that level downwards, changing direction. Instead, it continued. For it to have continued, that is a standard liquidity run. Okay, so basically that's the difference between the two. Okay, so from now on you shouldn't have any issues determining what's the difference between liquidity sweep and liquidity run. Okay, so if you have any question you can ask in the comment section. If you're a new viewer, please subscribe and turn on the notification bell. I'll see you in the next video. Thanks for watching.